Joining me now to discuss the potential fallout, Evercore ISI's Greg Melich. Greg, thank you so much for being here with us. I know that you cover Home Depot, and that was one of the names that came to mind for me as soon as I saw some of these headlines. What do you think the impact will be?
You know, we think for the retailers, especially one like Home Depot, they have a big, broad enough global supply base. And in the case of Home Depot, the majority of what they're doing, they're sourcing here in the U.S. already. We think it's pretty muted. If it's a big enough gap, you'll probably see some production move back to the U.S. And other areas, you'll find vendors that are able to find a way to take out some more cost to still, if it's more efficient to import it, then they will.
I mean, after the latest round of earnings reports, and we got a little bit more detail of at least some of the tariff impact starting to leak in through the company's businesses and the consumer's reaction, I've been really surprised, frankly, at how strong companies have been able to be when it comes to their mitigation strategies. And where there are price increases, consumers don't seem to be rebuffing. They are continuing to buy. Do you think that will continue as we see the full impact going into the back half of the year for your coverage? I mean, Christmas is coming, and we still haven't seen the full impact of the tariffs.
It sure is. And frankly, we do think retail sales are going to decelerate from the 5% growth that we saw in August, or a really strong back to school, as you described, to something with a 3 handle as we go towards holiday. So we do think we're entering a bit of an air pocket into the fourth quarter. And it's really going to be a function of some of the, what isn't mitigated is eventually does pass through. And we do think that puts a bit of pressure on consumer. What we don't know is whether consumers are going to spend less on retail goods, or could they take some spending out of other areas of consumption. So that'll be a key area as we watch into the fourth quarter. But we think it's a deceleration, not a disaster, if you think about holiday.
So you have a pretty wide range of coverage here, but you've got sort of the everything places like the Amazons and the Walmarts of the world, but then you also have the O'Reilly names. Which do you think are best positioned, both with their businesses and as well as the macroeconomic headwinds they may be facing going into the back half of the year?
I think that's a perfect question, and the key is to keep your eyes on the prize. And we look to say is play, but play it safe. Walmart is gaining share. They have plenty of new businesses and traffic growth that's allowing them in automation to basically eat some of the pressure of tariffs and still grow their margins. And we think make their numbers into year end. And I would say as you go to next year, keep an eye on Home Depot. That's a category that has underperformed for some time. The stock multiple has not been bid up. And, we think you could have some sort of a nice home improvement recovery next year. Remember, there is $125 billion of stimulus that we think will be even larger than the pressure of tariffs on consumers that'll be coming in the first quarter of next year. So once we get through this air pocket, we think you do need to play a little bit of offense. Home Depot to us is a good one. And on auto parts, look at that's a need-based category. And basically the price elasticity that we've seen from AutoZone just earlier this week is zero. So to the extent they have to raise price, the consumer is saying, you know what, that's better than paying more for a new car or even a used car. So I'll just fix up the one